Union Minister Ashwini Vaishnav posted on X an image showing the India's growth as per recent data. The tweet said, and I quote, 7.8% GDP growth, a testimony to PM Narendra Modi ji's reform-driven governance. The president of PhD Chamber of Commerce and Industry credited the new GDP numbers to the structural reforms by the government of India. Take a listen.
At PHDCCI, we are thrilled to announce the GDP results which have come out have been the best in the last 5 quarters. 7.8% growth report shows the strength of the Indian economy. The structural reforms which the government has done over the past many years have shown results in both rural and urban market both. We positively see that today there is growth in the construction industry, in the manufacturing, in the services, in the agriculture. Even with the hiccups of the Trump tariff today, we still see the continued growth. There may be small hiccups in 1 or 2 quarters, but long-term story, India remains quite buoyant.
And Dr. Charan Singh, eminent economist and CEO, Foundation for Economic Growth and Welfare, or EGRO, joins us on the broadcast. Sir, a very warm welcome. India's real GDP grew 7.8% in the first quarter of financial year 2025-26. And, you know, when we compare it to the quarter one of financial year 2024-25, it was 6.5%. What are the key drivers behind this growth?
See, firstly, I think I must congratulate the policymakers in the country that they are leading the country into such high growth phase. Despite all the projections being made by the IMF and the Reserve Bank of India, all the growth figures that come out, actual growth figures that come out, exceed the projections. That simply means that the country is doing exceedingly well, and at the grassroots level at production, especially at the MSME sector, the growth is doing very well. That's the positive sentiment that the country is recording. Secondly, I must also mention that the challenging times that happened in the last few months, we have all gone through the Trump tariff phase, and you know it, that has caused lots of uncertainty. But India's resilience is so apparent in these. The policies are good. The supportive policies for the MSMEs and the fiscal policy and the monetary policy are so good that we are able to record very high growth. Now, when you say the drivers of growth, I must mention that is, I think we should put it on record. The monetary policy has played an important role. Of course, the fiscal policy has been playing a very important role, nothing to doubt on that. But the monetary policy in the last few months, having reduced the interest rates significantly, I think has also given an impetus to the growth sentiment in the country. You have also seen that the gross fixed capital formation that is happening in the country is also higher, which is a very good driver. And also, please remember, during the COVID period, the fiscal policy that the government had at that point of time also did lots on capital expenditure. Capital expenditure is employment-oriented, also is forward-looking and futuristic, and we are reaping the benefits of that capital expenditure that had been incurred from COVID time onto the economy. Agriculture has done reasonably. As you have noticed, and you showed the figures at one point, that the agriculture sector recorded a growth of 3.7% in the quarter as compared to 1.5% in the previous year's quarter one. So I think agriculture has done reasonably well. And over and above the agriculture, there has been good amount of growth recorded in trade, hotels, transport, communication services related to broadcasting. That sector is doing very well. Financial, real estate, and professional services is doing very well. Actually, financial real estate, the increase from 6.6 to 9.5, I thought was phenomenal. But real estate sector is doing well. And then, of course, public administration, defense, there is a positive record. Now, the important thing that I would look at, despite the challenges that we have had, is that we are doing very well on government final consumption expenditure. We were in quarter one of the previous year recording a negative growth. And this time we have done 7.4. I think that's very, very positive. So if you look at the growth drivers, I would give credit to the sentiment which has been generated by the monetary policy. And then, of course, I would say government's fiscal policy in terms of capital expenditure has been very, very robust and supporting. And that's the figure which is showing up in gross fixed capital formation.
Indeed. Sir, in your assessment, uh, how does India's current GDP growth stack up against its BRICS counterparts?
See, it's very amazing that despite the challenges that have been imposed on India in terms of, to be explicit, the Russia oil related 25% extra tariff, right? And this fear has been there and the stock has been there. Despite this, there's no dent on growth, absolutely no dent on growth. And if you look at the growth rate of Russia and Brazil and China, obviously we are outperforming each of these countries, and by a big leap.
Correct.
China's growth rate is around 4.5 to 4.8%, which in the recent World Economic Outlook they had revised it, whereas our region continues to be 6.5, and for the next year also it's holding up. So compared to our neighboring countries and the BRICS countries, the emerging market bracket where we are slotted with, I think India is holding on very well. And one of the reasons why India is holding on very well is, I think, its demographic dividend. Country is young, the country is dynamic, and therefore, despite the challenges, I would rather tell you one thing. I've been a professor at IIM Bangalore myself, and I still teach. Whenever there is a challenge in this country, the country rises stronger than expected. I think it is that sentiment because of the dynamism of the country, the policies that are being framed, and the demographic of the country. Challenges only bring out the best of us. And the young population is reflecting that. Even in this data that you see, I'm noticing the same thing here. Even if you go granular, you find that the production of cement is doing very well.
Yeah, right.
The consumption of steel is doing very well. So what does that really indicate to me? Indicates that there is resilience, there is construction activity which is taking place, which of course I mentioned in the real estate and all that's showing very well. It is taking place, and therefore I don't see any fear, or I don't have any, I'm not worried about the dent if ever it would cause, the high tariffs would cause on India's growth.
Okay.
I don't see anything happening there. Rather, I am having a feeling that the time for a reset has come now. We are going to diversify into new markets, which somehow we were thinking everything is happening fine and nothing to worry. But this challenge has now come, and once this challenge is over, we have overcome it. What we are going to find, our traditional markets continue to be with us, and now we have added new markets to ourselves. So you can imagine the growth impetus, and 7.8 in this quarter.
Correct.
I'm sure is going to continue to reflect in the next quarters because we would have added to our diversified markets.
Sir, you just talked about diversification. You also mentioned it just a while back. India is now looking to diversify its export basket amid the US tariff heat, which you think will not have any effect. How significant is this shift, number one, and what sectors or markets are likely to benefit the most? Also the challenges related to it.
So my own feeling is that your operations in Sindhu opened up new opportunities for us. Delegations had gone to 33 different locations, and I think now is the time to explore them further and to convert it into economic relations. So those were diplomatic missions, but I'm sure that once we have established that bridge, we can now convert it into economic. And you have seen the president of the US, Trump, always talks in terms of economic factors behind everything which is critical. So why can't we convert that? Also, under the G20 presidency, the government at that time, of course, none of this was there, but it was the vision of the Prime Minister. Under the G20 presidency, we had spoken extensively about the Global South. I think the Global South is with India to a great extent. And those are the markets which we can again explore in a big way. We have done a foreign trade agreement with UK that sets the tone. And I think we can do many more in days to come, and we can explore further. So that will be another sort of opening for us. As far as the commodities are concerned and products are concerned, we have a mark on the pharmaceuticals. And I think we should continue to explore that. On others, where we could be dented because of the American tariffs are textiles, apparels, and I think those are the areas which we can explore in the global South countries. The other thing where I feel what we can do is that please remember there's prosperity in the country. We have been able to take care of the poverty already, and that data and statistics and studies have been done not within our country, one can say can get influenced or biased, but at the IMF of the World Bank. So that's an established fact that we have taken a very strong steps on poverty, got people out of it. So there is prosperity in the country. That means that our hinterlands are waiting. There is prosperity. The minimum support price has also been increased. There is purchasing power up there. Once all this is there, one is sure that in the hinterlands of our country, we have markets. So therefore, not only the need to go outside, we also have scope within our country. Now, within our country, what type of things can we be selling? Of course, automobiles is one of the best things. Housing sector can get a boost. And then also the other consumer durables in terms of refrigerators, ACs, things which we can. Electronics can also spread within our hinterlands. So therefore, I'm not too worried that because of the export problems, if ever there is, that our production is going to get impacted. My reading is in the short term, there could be a little dent,
Okay.
but I don't think production is going to get impacted in the medium to long term.
Production will continue.
Production will continue. Markets
With
will
the
get
same pace.
diversified. Yes, at the same pace. Markets will get diversified.
Okay.
And once the dust settles down, we are going to have rather a bigger share in the markets. We would have found new markets, both within the country and outside the country.
Okay, let's talk about the government policy, the role the government policy has played in driving this growth. What's your assessment of that?
To my mind, this is one of the best periods that India now needs to tell to the rest of the world that how government policies should be devised in times of crisis. And we should start from the COVID time. In the COVID time, as you know, the stimulus which we were giving was meager, but we were putting it because our resources were small. But the way we had done it in a very phased manner, some now and some over a period of time over the next 2 to 3 years. Unlike the Western world, which was pouring money when there was no absorptive capacity available at all, it was pure wastage. And that very quickly showed up in very high inflation in those countries. And in our country, despite our stimulus, which was targeted, laser based, and did a great job, and contradicted all the global projections that there will be lots of mortality rate here, it didn't happen. So our policies stood the test of time and did not lead us into any inflationary pressure, which those countries, most advanced countries, led into. Their debt to GDP ratios rose, and their inflation rose by a very large margin. So the policies that really helped us at that time was fiscal policy. So fiscal policy needs to be celebrated. And I think we should do case studies and tell the rest of the world how not to panic, but to plan in a very systematic manner.
Correct.
The monetary policy also played a very similar role. And when we had to ease, which we eased little later, we eased it. The financial sector policies also played a very important role because we were able to take care of our banking sector. It continued to be robust. Non-performing assets are amongst the lowest now in the range of less than 0.5%. Our external sector policies, the PLI scheme and the foreign exchange reserves that we built and the exchange rate stability that we maintained also played a very big role. So I believe that the government has played a very important role through various policies during this phase, while the rest of the world was crumbling or at least seen doing knee reactions and panicking. Indian policymakers stood their ground and came out with very realistic, well systematic, and well sequenced policies.
All right, sir. Thank you so much for joining in on DD India News Hour.